Hi, everyone. I'm Annie Tyler, a sales rep at Fidelity Title, and you've probably seen me around many of your events and in the office. I would like to introduce today the man who knows anything and everything about 1031 exchange. And if you have questions as we go along, you can throw them in the chat. We'll try to cover them or shout out at the end when we get to Q&A. Ron's going to walk us through it. We have quite a few folks who have joined now, about 18. And this will give you an excellent foundation and background, and also the resource to be able to reach out to Ron whenever you have questions or potential 1031 exchange transaction. Ron, would you like to tell us a little bit more about your background and then get started?
Okay, I would be happy to. Thank you very much, Annie. Thank you for the invitation from Thrive. Always love speaking at Keller Williams. You guys have such a great office. I'm sad we're not there, but that's okay. Yeah, so I've been doing 1031 exchanges for about 22 years now. So a lot of experience doing this. Love the business. I love helping clients. Before I go too much farther, just wanted to let you know that I'm here to be a resource for you. If you see the QR code on the screen there, you can download my information directly on there. So feel free to do that. Do not. I know many of you are relatively new agents. I do see a couple names I recognize, but I know most of you are rather new agents. The main thing I want you as a new agent to, if you've never really been exposed to 1031, is do not feel you ever have to become experts in this. Your job is to be the best realtor that you can be, just like you are not experts in termites or in escrow or in loans or things like that. You have your team that answers those questions. I want to be part of that team that helps you help your clients. So feel free to use me. You're welcome to give the clients my information. We'll talk more about this later, but I'm here to be a resource for you. With that, let's get started about what 1031 exchanges are and how to use them and what some of the rules are and how you can drive this to get more business, because I'm hoping everybody on this phone call today wants to do more business. And that's what we are here to help you do. All right, so let's start. 1031. 1031 is just a part of the tax code. It's a part of the tax code that allows you to sell investment real estate, buy replacement investment real estate, and in doing so, you get to defer paying taxes on the profit that you've made. So what does that mean in English? You have a client who has a rental house there in Cupertino. They want to sell that and they want to go buy a fourplex in Sacramento. So you list the property, you give Annie a call to open escrow. At the close of escrow, the money comes to a third party called the intermediary. That's us. You then go help them find that property up in Sacramento they want to go buy. We send the money to the title company there. So you're selling investment real estate, you're buying investment real estate, and as long as the client does not touch the money, because we had it, they get to defer paying taxes on the profit that they've made. Now, that's an important word, defer, not eliminate. So if you sell the house to buy a fourplex, later you sell the fourplex to buy a sixplex, and now you're old and tired and sick of real estate and you just sell that sixplex, well, then you pay taxes from the house, the duplex, and the sixplex. You are just deferring paying taxes. Now, sometimes people will ask, well, if I'm just deferring paying taxes, I'm going to pay the taxes eventually anyway. Why bother? Why bother doing an exchange if I'm just going to pay the taxes? There are two reasons we always want to encourage our clients to do an exchange. Number one, do you want to pay your taxes today or tomorrow? For most of us, the answer is tomorrow. The way I look at it is this. If you sell something and have a $300,000 profit, you're going to pay about $100,000 of that in taxes. But because you get to do the exchange, you don't have to give the government that $100,000. You get to use that money to buy more real estate. But the real reason you do the exchange is, when do you really want to pay taxes? And the answer is never. And guess what? You don't have to. Because sadly, one day we're all going to die. And when you die, you win. Well, be honest. When you die, your kids win. Because when you die, your heirs get what's called the step up in basis. I want to make sure we all understand this because this is a critical part of real estate. If I buy something for $100,000 and now it's worth $1 million, I have a $900,000 gain to pay tax on if I sell it. But the day I die, whoever inherits the property from me, their basis is the value of the property the day I died. And if your kids are like mine, the day after my funeral, they're selling everything. So when they sell the house for $1 million, how much capital gains do they have to pay? Zero. It's worth $1 million when I died. That becomes their basis. It's like their acquisition price. Now, if they own it for a while, it goes up in value. Now there's gain in the property. But all the gain that I would have paid had I sold the property while I was still alive, all disappears when I die. It's called the step up in basis. It's one of the most amazing things in the tax code, and it's on all of your assets, your house, your rentals, your stock portfolio, your art collection, everything. It's a great thing. Side note about this does not work if you gift real estate to your kids before you die. So if you gift the real estate to somebody before you die, you're actually gifting them your tax problem. So as a rule, we want to try to avoid gifting real estate. It's much better for your kids to inherit the real estate than it is to have it given to them. So anyway, just a side note about that. All right, so enough about dying. Let's move on to 1031s themselves. You will often hear the term like kind. What you sell and what you buy have to be like kind. That is a very confusing term, and also, as you'll find, a very unnecessary term. Any kind of investment real estate can be exchanged for any other kind. You can sell a rental house and buy a shopping center. You can sell a farm and buy an apartment building. You can sell land and buy a rental house or a shopping center or a farm. Any kind of investment real estate can be exchanged for any other kind anywhere in the country. It's much more flexible than most people think. Now, a lot of times people say, well, why are we so hung up on the term like kind? It's because up until very recently, we used to do a lot of exchanges on things other than real estate. In my 20 plus years of doing this, I've done exchanges on airplanes. I've done exchanges on farm equipment. Okay, so that's what like kind meant. If I sold farm equipment, I have to buy farm equipment. If I sell a boat, I have to buy a boat. I did an exchange once for a guy who sold his FedEx delivery route and bought a UPS delivery route. That was a like kind exchange. Now, as of 2017, all exchanges except real estate are gone. So now any personal property cannot be exchanged. 1031 is now only for real estate. So that term like kind really isn't very relevant anymore because you can buy and sell any kind of investment real estate for any other kind. All right. Now, we did say, though, it has to be investment real estate. So what kind of real estate is not investment real estate? Your primary residence obviously is not investment real estate. Now, under Section 121 of the tax code, that says when you own a primary residence, you get to keep a specific amount tax-free. If you're single, you get to keep $250,000 of the gain tax-free. If you're married, you get to keep $500,000 of the gain tax-free. Now, that was a lot of money back in 1997 when we established these limits. Nowadays, not so much, especially here in the Bay Area. It's very, very, very common for people to have way more than $500,000 of gain in their primary residence. So because of this, we have a lot of people who feel kind of stuck because they don't want to sell their primary residence and have this huge tax gain. So the first thing is, are there any other things clients can do about this? Well, yes. First off, does any portion of the property qualify? Do you have an ADU? Do you rent out the basement? For you as realtors, do you have a home office? If you are declaring on your tax return a percentage of your property as rental or business property, that percentage of the sales price you can do an exchange on. Now, I want to emphasize, it's based on what you report on your tax return. Okay. If you're renting out the basement and not declaring the rent, you do not have an ADU. If you have a home office, but you're not declaring it on your taxes, You do not have a home office. But whatever percentage of the property you are declaring, you can do an exchange on that part. And you'd be surprised how many people these days have ADUs or rent out rooms out of their house or have a home office that they're declaring. So again, the key here is what percentage of the property can you do you show on the tax return? So using this example here, property sells for $1 million, 20% of it is being declared as business or a home office or rental, whatever. 20% of the sales price they can do an exchange on. The other 80%, they get their full $500,000 exclusion against. So it is possible for property to be both an investment property and a primary residence at the same time. The truth is, though, that most of us do not have a home office. We do not have an ADU. So what do we tell these people to do? Move out. Turn your house into a rental property. Now, after renting it for a year or two, is that house now an investment? Yes. Is it still considered to be a primary residence? The answer is yes, because it still meets the criteria in Section 121 of having lived in the property 2 of the last 5 years. And because it meets both criteria, you could take advantage of both tax rules at the same time. So let's say the property sells for $2 million and you're dealing with a married couple. They get to keep 500,000 and then do an exchange on the remaining 1.5 million. Now, a couple things to note here. First is if you need the money from your house to go buy a bigger house, it's not going to work for you. But if you don't need the money from your house to go buy a bigger house, this works very well. The second aspect to it is that you are not reinvesting just the excess profit. You are reinvesting everything minus the exemption. I did one of these a few years ago for a guy who sold a $20 million house. He was single. He got to keep $250,000 and did an exchange for the remaining 19.75 million. So again, this does not work for everybody, but if you have a client who has a highly appreciated primary residence and they feel trapped by it because they don't want to be writing a 6 or even 7-figure check to the government, this is a great strategy for people. And by the way, I do a lot of these, at least 2 or 3 every single week. So this is a very important part. All right, so that's about primary residences. What about other properties that don't qualify? Second homes do not qualify for investment as investment property. Now, a vacation rental does, but a property that's used for you and your family's personal benefit does not. So that little house, you go to on weekends in the mountains or on the beach or whatever, does not qualify. Now, most of you thinking, well, that's okay. My clients don't have second homes, but a lot of people have second homes. You know why? Because they let their kids live there. Just yesterday, I was talking to a woman. She wanted to do an exchange. I go, well, how have you been using this house? Well, my daughter lives there. Does she pay you rent? No. Then guess what? It's not an investment property. If you got a family member living in there and they're not paying you market rate rent, not an investment. So be very careful about that, especially when you have family members living in property. Flipping real estate does not qualify for 1031 because flipping real estate is considered to be property held for resale. You buy, fix it, you sold it. You bought the property with the intention of wanting to sell that property, so it does not qualify. Similarly, development does not qualify. Buy a bare piece of land, build a house on it, and sell it. You are a developer. That's not property purchased for investment purposes. Lastly, you cannot exchange into any kind of non-direct ownership of real estate. So partnerships or syndications, technically they own real estate, but you own a share of the partnership or syndication or REIT that owns real estate. That is not direct ownership of real estate. It does not qualify. You have to directly own the real estate to qualify for the 1031. So again, main thing for you to take away here is any investment real estate for any other investment real estate anywhere in the country. All right. Now, many of you I know are newer agents, like we mentioned earlier. What's your role if the seller wants to do an exchange? The reality is there is very little for you to do if your client's going to do a 1031. So if the seller says, hey, I'm going to do an exchange, my first words to you are don't panic, because there's very little that you need to do. First thing you need to do, though, is make sure the client knows what the hell they're doing. Make sure they understand the rules of the 1031 exchange. You are welcome to have the client call me. You're welcome to call me and say, please call my client. One thing I love to do for newer agents, let's set up a conference call. In fact, just before our class today, I got a phone call from an agent. I got a text from an agent. Hey, can we do a conference call with my client on Friday because they have questions about the exchange? Happy to do it. I have brochures. I got stuff I can email to you. I have this stuff in 10 different languages. So again, please make sure the client understands the rules. I would say that most of the people who call me who've never been involved in a 1031 have at least one very serious misunderstanding of the 1031 rules. So please make sure they know what they're doing. Number two, you do need to disclose it to the buyer. So there is that something you put in the contract. Sometimes you will see, like in the listing, buyer to cooperate with seller's 1031 exchange, or seller to do 1031. The key here is that is solely a disclosure. It is not a contingency. There's also, in the car contracts, the seller's intent to exchange addendum that you can use. Again, it is solely a disclosure that the seller is doing an exchange. It does not put any right to the seller to make changes. It is not any kind of contingency. If you want contingencies, you need to make those explicit in the contract. So educate the client, disclose it to the buyer. And number three, please remember to call me before escrow closes, because we are a required part of any 1031 exchange, and we have to be involved before escrow closes, because the escrow officer needs to know that the money is coming to us, not to them. So, please make sure we are involved during the escrow process. Again, I'm happy to talk to your client at any point during the transaction, even before you take the listing. All right. So you've sold the property. We're holding the money. Now, what does the client need to do to find the replacement property? Well, there are two very important things: how much to spend and how long do you have? So let's talk with how long do you have. The key in the 1031 is you have 45 days from the close of escrow to identify what you are going to buy, and 180 days to actually buy it. 45 days to tell us the exact address to what you are going to purchase, and 180 days to actually buy it. Both of these clocks start the day escrow closes. Now, is 45 days a lot of time? Now, before I go there, do you have to be in contract by the 45 days? Technically, no. Technically, you've given us a list, and I'll say how many in just a minute, but let's say you give us a list of 3 properties. And if on day 46, though, they're all sold to somebody else, you're out of luck. So technically, you're just giving us a list of addresses, but in reality, what you should be planning is by day 45, you're in contract, your inspections are done, your loan is approved. You want to be locked into a property by the time you get to day 45. Now, again, the clock starts at the close of escrow. So if your client is worried about not finding a replacement property within those 45 days, my suggestion, ask for a longer escrow. Okay. I'm seeing a lot of 45, 60, 90-day escrows, or maybe a 30-day escrow with an option to extend 30 days. Again, the key here is that once the clock starts, so once escrow closes, that 45-day clock is ticking, and there ain't no stopping it. There are no provisions for any kind of extensions or exceptions that the client can request. So that's why that's such a critical timeline. Now, I will say at this point also, I often get the question, can I buy the new property and then sell mine? The answer is yes. There is something called a reverse exchange where you buy first and then sell. I'm not going to go into it too deeply. Just want to make sure you know it exists. It is a more complicated transaction, a more expensive transaction. But if you have a client who needs to buy something before they've sold theirs, yeah, there is a way to do it. Now, When we talk about identifying how many properties can we identify, I don't get too deeply into this. Most people who are only going to buy 1 or 2 properties will identify a maximum of 3. If their goal is to buy multiple properties, then you could use a dollar limit. And that dollar limit is 2 times the sales price. So if it sells for $1 million, you can identify $2 million worth of property. Don't confuse these. 3 properties or fewer, no dollar limit. Only kicks in, that dollar limit only kicks in once you identify more than 3 properties. So those are the key ones to remember. Again, don't focus on how many they can identify. Focus on you want your clients to be in a firm contract by day 45. And I will go as far as to say most of my clients are actually done with their exchange by the 45 days, which is great. All right, so and by the way, if you remember nothing else out of 1031s, remember that 45-day clock, because that's far and away the thing that trips up the most people about it. All right, next, how much do you need to spend in order to finish your exchange? And this is where a lot of people have it wrong, but it's actually very easy. All of it. If it sells for $1 million, you need to go buy something for at least $1 million. I don't care what the equity is. I don't care what the profit is. I don't care how much you spend fixing it up. All I care about is how much are you selling it for? Now, if I sell it for $1 million, can I buy for more than $1 million? Yes. Can I buy multiple properties that add up to $1 million? Yes. Can I buy for less than $1 million? The answer is actually yes, but you pay tax on the difference. So if you sell for $1 million but only buy for 900, that difference, sometimes you'll hear the term boot. Boot is what you pay tax on. So if you want to buy something less expensive and pay tax on the difference, you are welcome to do so. Just note that it is something that you need to, you just know that that's going to happen. So as a rule, though, you want to buy property more expensive than what you sell. Part 2, equally important, all the cash, all the equity that came from that sale, all has to go towards the replacement property. Any cash left over, you pay tax on. So and now this was a really big deal a few years ago when interest rates were really, really, really low. People were maximizing the amount of loan they were getting. Sometimes they would get too big of a loan and have cash left over. That's a problem. Obviously, if there is currently a loan on that property, then Annie's wonderful escrow officers will pay off that loan at the close of escrow. But you need to make up that loan, because if you're selling for $1 million, but there's only $600,000 in the account because there was a $400,000 loan, you still need to buy $1 million worth of property. So you have to make up that loan either with another loan or with cash from your pocket. So you do need to replace the value of the debt that was on that property. Obviously, anything left over, as we mentioned, is considered to be taxable. My rule of thumb, easy way to look at it, did you buy something equal or greater in value? And did you use at least all the equity that came from the sale? Equal or greater, use all the cash. As long as you're doing that, you are deferring all of your taxes. By the way, I know a few people jumped on a little bit later, which is wonderful. If you have any questions, please put them in the chat box and we will address them at the end. I'll also at that point open it up to general questions that people will have. But if you got questions right now, feel free to put them in the chat box, and Annie will be monitoring that. So in effect, that's the 1031. You're selling investment real estate, you're buying investment real estate. Got to know what you're going to buy within those 45 days. You got to spend all the money, but it really is not a difficult process. Now, there are a few what I call red flags, a few things to be careful about when you're doing exchanges. The first one is family. There are restrictions in the 1031 code with transactions being done with related parties. We typically think of related parties as either corporately related or familially. So your parents, your children, your siblings. Basically, you cannot buy from family members as part of an exchange. Now, there are some certain exceptions, but as a rule, if you're dealing with somebody who wants to buy or sell real estate among family members, please call me. Sometimes you can do it. Sometimes you can't do it at all. Sometimes you can do it, but you got to follow special rules. So be very careful with transactions where people are saying they're going to buy or sell among family members. Part 2, seller financing. Seller financing isn't too common in the Bay Area. but it's very common with commercial real estate as well as agricultural and a lot of rural areas. Seller financing is a wonderful tool if you're looking to cash out, but if you want to do an exchange, it's a problem because that note almost always becomes taxable. So be careful about seller financing. Third thing, and this is probably the biggest area we have, vesting. It has to be the same seller selling and buying. It has to be the same taxpayer selling and buying. So if Annie sells, Annie has to buy. She can't give the money to Colleen to buy the replacement property. So the key here is whenever you get this, whenever you get a new listing, you give Annie a call, and she's going to give you this magical document called a prelim. Read it. Please make sure the people on title are the people who are sitting across the table from you. Even adding a spouse is a problem. So if someone bought something when they're single, now they want to buy it with their spouse, that's a problem. Because a partnership wants to dissolve, that's a problem. So any kind of change to the vesting, call me, let's go over the situation. Next is foreign sellers. Now, it is perfectly okay for foreign sellers to do an exchange. Any entity can do an exchange. Corporation sells, corporation buys. Partnership sells, partnership buys. Foreign seller sells, foreign seller buys. Where you have to be careful, though, is they are subject to something called FIRPTA, which is the federal withholding. And this is something that escrow has to do. They must do. They cannot pass on that obligation to us. So the reason I bring this to your attention, if you are dealing with somebody who is not a U.S. citizen or permanent resident, then they very well may be subject to this FIRPTA withholding. Please let both us and the title company know as early as possible. There is extra paperwork to do. There's a lot more involved if your seller wants to do an exchange, and there's federal withholding. It's also absolutely required that they must have a U.S. Social Security number or tax ID number. If they don't, we can't do the exchange because the banks will not allow us to put the money anywhere. So be very careful about foreign sellers and buyers. The key takeaway is let us know early if that's what they want to do. Lastly, us as the intermediary, please be careful because what we do is not regulated. And there are a lot of small exchange companies out there who may be a little bit cheaper than us, but they have no bonding or insurance or any type of corporate guarantees that your client's money is being protected. So stick with the big companies, stick with the ones who have big parent corporations behind them, like us. We're owned by the same company that owns Fidelity Title. We want to we have a vested interest to make sure your client's money is being protected. All right. Other than that, what are some of the common myths that people have when it comes to exchanges? I'm not going to go over all of these, but a couple to note. 1031 exchanges used to be where you buy and sell the same day. So it has to be basic. I like your land, you like my office building, we'd swap properties. And that's what a lot of exchanges used to be. And a lot of older people still think that's what it was, or still what it is. It isn't anymore. Now you're selling to one person, you're buying from another. Also, a lot of people expect exchanges to be very expensive and and a lot of work. It's not. It costs $1,000, $1,200 to do an exchange. It's very inexpensive, very easy to do. We can do the paperwork within a couple hours. Not difficult at all. A lot of people think 1031s are an automatic audit to the IRS. Not true. Also, a lot of people don't know that a primary residence can be both an investment property and a primary at the same time. I hear this a lot with accountants. A lot of accountants don't realize this. So I teach a lot of classes to a lot of accountants with specifically focusing on how property can be both at the same time. With that again is what a 1031 exchange is. So let's start with the fun part. Why do people do exchanges? Well, the natural thought is, well, you do an exchange because you don't want to pay taxes. And I'm going to disagree with you. If you don't want to pay taxes, don't sell the property. Don't sell the property, you don't pay taxes. The reason you do an exchange is because you want to buy something better. Now, what does better mean? Better means whatever the hell the client wants it to mean. It could be, I want to buy property that's, come on here. Oh, next. There we go. I want to buy something that, sell my 3 houses to buy an office building. Maybe I want to sell my office building to buy 3 houses. Maybe I want to buy something that is going to generate better cash flow for me. Maybe I'm going to move to Arizona, so moving my rentals to Arizona. Maybe I want to do the 1031 exchange to Hawaii because in 3 or 4 years I'm going to retire and move to Hawaii. Maybe you're running out of depreciation and you need to exchange into something that's going to get you more depreciation. A lot of older people, they do exchanges because they want to buy property that's easier to manage. And also, I also do a lot of exchanges on people who are much older, usually 85 plus, who use the 1031 as an estate planning tool so that each kid knows exactly what they're going to inherit. So the reason I point this to your attention is when you're focusing on investors, don't focus on deferring taxes. Nobody wants to pay taxes. What you want to focus on is, what do you want out of your real estate? What are you looking for that you're not getting today? What is a better property for you tomorrow than the one that you own today? If you talk to anybody who has owned a piece of real estate more than 10 years, 95% of them would prefer to own something different. Why? Who knows? Better cash flow, better location, deferred maintenance, whatever the case might be. But again, the key here is 1031 is the tool that allows you to get from the property you own today to the property you want to own tomorrow. And with that, I just want you to think about that when you're talking to your investors. What do you want out of your real estate? 1031 is what's going to get you there. Now, a lot of you probably do some marketing. I want to talk a little bit about farming right now, because I would hope that all of you are trying to get more business. Hopefully, a lot of you do farming, sending out postcards and letters. But I will also say that a lot of people do target marketing wrong. I personally own real estate either for myself or for from a partnership that I manage in 4 different states. I get postcards and letters virtually every single day. You guess what? Most people who send me stuff, I don't care. Hey, I just sold the house down the street. I don't care. Hey, I'm about to list the property. I don't care. Here's a recipe for banana bread. I really don't care. Okay. But if someone calls me or sends me an email and says, "Hey, your cash flow is about to run dry," or "Hey, you need to do better to make more money," now I'm listening. So what I'm going to recommend that you do is work with Annie, and I'm going to have her talk here in a couple minutes. But I want you to focus with her on a farm. Now, what I'm going to suggest to you is don't ask her for 5,000 contacts. What I want you to do is focus on a farm of 50 to 100 people at most, but those that you can send a very specific target to. For example, if you know there's a condo association that has very high HOAs, maybe that would be a good group for you to target. And Annie can give you the non-owner occupied people in that condo complex that you can focus on email about HOAs. Bare land. What is how much income are you getting from bare land? Probably very little. Maybe you want to focus on people who own real estate locally but live in other states. They don't know what the market's like in California. And they probably, if they move to Texas, guess what? Real estate prices in Texas are plunging, but real estate prices here in California are actually going up. They don't know that. So these are just ideas. Long-term owners may not have depreciation left on the property. Maybe you want to focus on people who bought property in 2009, 10, 11 when the market was at the bottom. Again, the key here is sending a targeted message to a smaller group of people with whom that message is going to resonate, is going to get you more success than a generic message to a lot of people. Annie, do you want to talk a little bit about farming and how you can help them?
Sure. Actually, I was, what I was planning to say is really piggybacking perfectly on what you're saying, which is that, of course, I can help you with a standard farm, kind of old school where agents would pick an area and be mailing and contacting those folks. Just a general area. I think that in today's market, most agents that I work with, I sit down with them and I get to know them and their strong points, the types of clients they've worked with, the things that have worked, etc., and help come up with very unique farming strategies, such as some of the ones that you have on the screen here to market for 1031 and exchange and investment type folks, but also even primary residences. I've sit down and help strategize for unique strategies that are going to be more effective. My background actually primarily has been in law, tax, and finance, working for estate planning attorneys in the past. So if you want to go after probates, trust sales, but really all kinds of farming, I do think that this is the time where we need to be a little bit more savvy about our farming. So I can help you do that. I'm going to put my email address and phone number in the chat so you can reach out to me if you like. And also, Ron, we do have a few questions. Do you
Okay,
want to get
hold
to
on.
those?
Let me wrap up here, then we will get to the questions.
Okay, perfect.
All right. All right. So just wanted to just wrap up again. A couple of things I do want to point out just to recap what we said at the beginning. Again, for those of you who this is your first real exposure to 1031, or it's been first in a long time, you don't remember it very well. Again, do not feel you ever have to become experts in exchanges. Your job is to be the best realtor that you can be. Let me help you help your clients. Use me. I'm happy to talk to your clients at any point in the conversation, even before you take the listing. Okay, I'm here to be that resource that's going to help you get that listing, hopefully help you get that client. If you loved my class and you want to give me a 5-star review on Google Business, you're welcome to do so. Always love those on the review there. But other than that, I'm now going to open it up to questions. Annie, why don't we start with the ones in the chat box, and then we can go from there.
Okay, thank you, Ron, and thank you also. You and I do have some mutual clients, and I see that when they reach out, you are very responsive. So thank you for that. The first question is, if we need cash from real estate, we don't use 1031 exchange. Is that correct?
Well, when you say you need cash, I mean, you can always refinance the property to pull out cash. There's no harm. There's no penalty tax by refinancing the property to pull out cash. That's perfectly fine. But yes, I often will have clients who say, you know what, I need to sell this property because I need money to do something other than buy other real estate. In that case, yeah, don't do the 1031. I mean, you don't do an exchange just to defer the taxes, because if you need that money for something else, yes, go ahead and sell it, pay the tax, and go forward. Don't worry about if you need the money for your primary residence, for taking care of your grandmother in the hospital, whatever. Yes, that's perfectly fine. You can always sell it and pay the taxes. But if you just need to access some cash, a lot of time people will just go ahead and refinance the property to pull cash out that way.
Okay, and the next question is, what if you own a fraction of property and want to do 1031? Do you still need to find an exchange property that is equal or greater than the property that was sold?
Great question. So let's talk about fractional ownership. When somebody calls me and says, "Hey, I own property with other people, other than your spouse, other people, and I want to do an exchange on my share." My first question is always, how do you hold title to the property? Do you hold the property in some kind of partnership or LLC, or is the property in your name as a tenant in common where you own a fraction of the property? If they own the property in some kind of entity like a partnership or corporation, that can get pretty hairy because technically now that's the entity that has to do the exchange. But if they own the property as a tenant in common, where they own 50%, let's say, and they own another couple owns the other 50%, then yes, they can do an exchange just on their share. And so they would only need to do an exchange for their percentage of the property. So let's say the property is worth $1 million and they own 50% of it. So their share is worth $500,000. So they need to do an exchange for at least $500,000 to defer all those taxes. So it's equal or greater to whatever their share of the property is, not necessarily the entire sales price of the property.
Okay, that's what I thought you were gonna say. And then looks like our final question in the chat is, what does the buyer need to do specifically to cooperate with the seller in a 1031 exchange? I know you've probably gotten this one.
Oh yeah, this is the fun thing. Like I mentioned earlier, you are just disclosing to the buyer that they're doing the exchange, and so what are they actually cooperating with? Because it does not cost them anything, it doesn't delay anything. Well, the reason is that technically what's happening is the exchange company is actually stepping into the contract. So technically, the seller is selling the property to us, and we are selling it to the buyer. So the because we are stepping into the buyer's contract, the buyer needs to be told that's happening. It has no impact on them, but Annie's closing statement will, at the title company, will show that that we technically were the seller of the property to the buyers. That's the only reason they need to know that that the seller is doing exchange. Again, it has no direct impact on them. It's just that because we are technically in the contract, it needs to be disclosed to them.
Okay, I think I have one more question. They just slid it in there. Can we exchange a property sold from a single member LLC?
Okay, so before I answer that question, if anybody has any questions and they would prefer to just raise your hand and we'll call on you, and we'll I guess and then we'll open up to everybody else. But feel free to raise your hand if you have more questions that you want to just talk about it. All right, so let's go back. Single member LLC.
Mm-hmm.
Any entity can do an exchange. Corporation sells, corporation buys. LLC sells, LLC buys. So any entity can do an exchange. Now, when we talk about a single member LLC, what a single member LLC is an LLC that's owned solely by one person, or if they're in California, a married couple filing their taxes jointly. And it's called a single member LLC because it does not file a separate tax return. So you and your LLC are the same taxpayer. So yes, a single member LLC can do an exchange, and when they buy the replacement, they can either buy it still in the LLC or in their own name or their revocable trust, because they're still the same taxpayer. So again, the takeaway here is any entity can do an exchange as long as it's the same taxpayer buying the replacement property. Sarah, you were the first to raise your hand.
Yes, hi. I have a question. I heard in the you said that for 1031 exchange, you can sell one property and buy multiple property as long as the amount equal or greater than.
That's correct.
Can you tell me more? Like talk more about that? I still don't understand how this works.
Okay, no problem. I mean, I'll give you a perfect example. This morning, I was on the phone with a woman in Fresno. She's selling a piece of land for $700,000. She wants to take that money, go to Tennessee, and buy 4 houses at $200,000 each. So you can sell one and buy multiple. So 4 times 200 is 800. So that 800 is more than the 200,000 or the $700,000 she's selling her land for. And so that's why you can sell one and buy multiple. I just did another exchange yesterday where a woman is buying a replacement property, one in Texas and one in Colorado. So again, they could be anywhere in the country, but it's just buying multiple replacement properties. Does that answer your question?
So you mean that but like when you sell the, let's say the 200 property, and then how does that count at 1031 exchange in tax benefit? Because you need to sell that later, right?
Right. So what happens is when you have a profit in your property, that profit then gets prorated among the property. So effectively, if you buy 4 $200,000 properties in this example, each of those properties will then get a 1/4 of the gain allocated from that original property. So that each one is now a standalone property, investment property for tax reporting purposes. So if down the road you want to sell one property, then that's okay. You can do that and either do another exchange with that property or cash out and just pay the taxes allocated to that property. So each one becomes a standalone property. In fact, I did an exchange once for a woman where she sold a house in Palo Alto and went to Las Vegas and bought 16 houses. And her plan was that every year she was going to sell one of them so that she can pay just a little bit of taxes every year, because her massive gain she had in the Palo Alto property got distributed among all 16 on a pro rata basis.
Okay, and the next follow-up question is, can you buy, let's say, two property, but like you rent it out, that too, and then you live in there for 2 years in one of the property to get the 500 tax benefit?
Okay, so the key there is when you do an exchange, you do need to buy the property as an investment property. So if you do an exchange, you need to rent the property for a few years before you convert it to a primary residence. Now, can you buy a property? So when you buy the property as that you're later going to convert, later you move into the property, there's no tax due when you move into the property. However, if you ever sell the property as a primary residence, you will have to pay some of the taxes. You do not automatically get the $500,000 just because you've lived in the property for 2 years. You have to do a calculation to show a proration, how many years you lived in the property versus how many years you rented it. It's a very complex thing. By the way, one thing I do want to mention about this is that any topic we've talked about today that you want more details about, I have pretty much a 1-page PDF on any specific topic you want to talk about. So moving into your rental, moving out of your rental, converting your property. I have PDFs that discuss all of this. So feel free to reach out to me and I can get you some additional information on all of those. Does that answer your question, Sarah?
Yes. So I think I still have more questions, but as you say, I will give the time to other people. I will contact with you later.
Yeah, feel free to call me anytime.
Thank you.
Bing.
Yeah, I have one question. Like, what's the exchange service? Get in the transaction. Do we have to use the exchange service? Why? What's the benefit? Yeah.
So whenever you do a 1031 exchange, whenever you want to sell one investment property and buy another investment property, you have to use the intermediary. You have to use a company like us. We are a required part of the 1031. And for this, we charge a very small fee, $1,000 when the property is sold, and $250 for each property you buy in replacement. So it's a very small fee, but we are a required part of the 1031 because the client cannot receive the money. That's what our job is.
Oh, okay. So except this, what are the other benefits like your exchange service provide?
No, that's a very good point. Our role is solely to be a neutral third party. We do not provide any other, so we cannot be the client's accountant, their attorney, their realtor, their lender, their financial planner. We are by definition a neutral third party. Our entire job is solely to hold the money between when they sell something and when they buy the replacement. We have nothing else to sell them.
Okay. Thank you. Yeah.
And there was one more question in the chat. Can you exchange your property to a fractional ownership in another LLC?
Well, the answer is you can do an exchange to buy a fractional piece of the property as a tenant in common, but you cannot do an exchange into a property into a share of an LLC or partnership, because that is not direct ownership of real estate. So you need to exchange into a tenant in common share of the property.
Okay.
All right.
I think we might have covered all the questions.
All right. Does anybody else have any questions they want to unmute themselves and just ask?
Yeah, I have one question.
Yes.
Yeah. Suppose if I buy a property and live 1 year, and after that it's an investing property, can I do that 1031 exchange?
Yeah, as long as the last use of the property is as an investment property. Now, one question is, how long do you have to rent it for before you do it? The tax code doesn't give us a specific amount of time. Most accountants like to see 1 to 2 years of rental history before you do the exchange. But yes, I mean, as long as the last use of the property is as an investment, that does work.
Okay, thank you.
Anybody
Well, that
else?
was a great and informative, interactive presentation. I hope to hear from you folks. If you'd like to reach out to chat about farming, and of course, anything about 1031, ask Ron.
All right. One last thing I do want to mention is I do have a newsletter I put out on 1031 and tax related information. It comes out once a month. I'm not going to bombard you with stuff. I will not sell your information. If you want more information on a monthly basis about exchanges, about what's happening in Washington, about taxes in general, send me an email or text me or just send me your information. I'll add you to the list. Actually, my next newsletter is coming out on Thursday. So you'll see what it's like. But if you're interested, let me know. And again, our goal here is to keep you guys educated and up to date what's happening with the 1031 world.
Oh, that sounds awesome. Thank you, Ron.
All right. Thanks
Thank
very much
you.
for coming, everybody.
Thanks,
very
everyone. See you
helpful.
next time.
Thank you.
Thank you.
All right, guys. Take care.